Hello everybody and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce on the market and look for something to do. Well, if you're watching the markets at all last week, you saw a pretty wild ride. As you can see here, the last few days of the week, the market just completely tanked. Now, it still hasn't hit the lows for the year. You can see right here, this is kind of the lows for the year so far. So this is a big move down, but it's still not where we've been. So at least in my world, not cause for any kind of panic yet. What it does is it spikes the volatility in the market, and as volatility-based traders, we like that. So even though this was a big move, I wasn't necessarily involved in it, didn't affect me on a day-to-day basis, but what it does is it opens up opportunities. Where most people get scared over here, as a volatility-based trader, we get excited. Volatility is boosted, so now we get to bounce on the market and look for something to do. So this is the S&P 500. You can see big move there. They all look fairly similar. There's the NASDAQ. The Russell's obviously been the weakest one of the whole thing, and you can see this one for the year has kind of been in like kind of this tight range. Bottom line, the market seems to be moving down slowly. It has big moves, but in the grand scheme of things, if you look, you can see it's been bouncing around more than just like a straight down shot. So it's kind of just bouncing around, but it's getting volatile and we like that. So what are we going to trade? Well, I'm sure a lot of you are aware of what happened last week with Netflix. It took a complete dive, lost 30% of its value over earnings in one day, which is huge, right? I mean, in the end, that's like some ridiculous number, like $50 billion in value or whatever it works out to. But for us as traders, what that means is volatility has spiked. And even though earnings is over, the volatility is still really high, way up here. You can see 93%. We really can't get a whole lot higher than that, and as high as it's been in the past 6 months. So that looks good for us. And even though Netflix is volatile, I haven't had a lot of success in the past with Netflix. Once again, we just look at opportunities and we're defining our risk. So even if things don't work out, look, we know we can afford to make this trade because if everything worst case scenario happens, I know ahead of time what I'm risking. So if you're not comfortable risking these numbers, you don't make this trade. But that's the beauty of defined risk trading. Doesn't matter if the stock goes to zero in the next 45 days when I make this trade. Okay, I know my worst case scenario is X amount of dollars, and if that happens, I know I can withstand that gut punch. So if we go to the trade page, we're going to go here to the 54-day cycle. These are the monthly, so tomorrow that'll be 53. And I've already set it up for us to make it simple. And I'll actually pull the chart up so you can look at where we're at and where this trade is. So we're at 210. So what we're doing is we're going $30 down on the put side, and oh, sorry, that's the low. The actual price is up here, my bad, at 215. So here's the price right now, 215. So we're going $35 down on the put side, $35 up on the call side, and then the strikes in Netflix are $5 wide. So this is a bigger trade. So all we can do is buy the put and the call that are $5 away to create a $5 wide Iron Condor in this case. And what we want to collect here is 165 or more. And how do I know that? Because our rules state we want 33 cents per dollar width in strikes at a minimum. And these strikes are $5 wide. So all we're looking to do is collect at least 165 on this trade, and that'll be a good trade for us. And right now you can see it's at $1.82, so that works. And remember, when we figure out what's our max potential loss, we always take the width of the strikes. So this is $5 wide. If we collect 165, what that means to us is this is $5 in width of strikes, which means this is a $500 total trade. We are collecting 165 when we make this trade. So if we subtract that out, that means we are risking $3.35, which equals $335. So if this trade is too big for you, then you wouldn't make it, because we have the potential to make 165, but we have the chance of losing 335 if things go horribly wrong. And that's why I say defined risk is great, right? It doesn't matter how volatile Netflix is. Doesn't matter if Netflix goes to zero in the next 54 days, 53 days. If I can afford to take this hit, I'm not scared at night. I can sleep well because, hey, I know worst case scenario is I'm going to lose $335 on this trade, but the most I can make is 165. So that's our trade for tomorrow. what we're going to do is, if everything stays the same and the stock opens up right here, we're going to go $35 up on the call side, $35 down on the put side, then buy the call on the put $5 away to create a $5 wide Iron Condor. As long as we're collecting 165 or more on this trade, that is good. And that is our trade in Netflix for tomorrow. Hello everybody, Cal here with what I believe is an exciting opportunity. But just before we get started, I want to make sure you're aware that I do have quite a few courses up on Udemy. All the ones that are available are listed here. And some people don't know that these first three here are an actual three-part series. So number one in the series would be understand options, number two would be basic option strategies, and number three would be make and manage profitable trades. Again, if you're taking one, now you know that it's a three-part series. You might want to take part 2 and 3, or if you're in 2, take 3, etc. And then I have a couple extra courses there as well. But the purpose of this video is because I want to get you up and trading as quickly and confidently as possible. And the best way I've come up with to do that is by offering an alert system where you see me trading in real time, making and managing my trades. So if you go to sharpertrades.com and you click on the products button here, you'll see these two pop up: Option Basic Alert and Option Pro Alert. They both contain the alert system. The only difference with the Pro is it has a 13-course bundle. It has every course I've ever made, many of which aren't even available on Udemy. But what I'm offering you today is a deal on the alert, because I really want to get you up and trading as quickly and confidently as possible. Look, knowledge is power, but if you don't put that knowledge to use, then really what's the benefit of learning all this stuff in the end? So to get you up and running as quickly as possible, I've created a code here, basic option FB1. Again, I want to make sure you're aware it's only for the basic alert. It's not going to apply to the Pro. But if you do this now, I'm offering $1 for the first month, because I want to get you to try this alert system, see if it's something you can use and get you up and trading quickly. Just so you're aware, I do 2 to 3 alerts per week, 2 to 3 trades, and I also manage my profitable trades as well. So I send out alerts for the closing trades, for the profitable ones as well. 2 to 3 opening trades per week. So if you go there now, type in this basic option FB1 for the option basic trade alert, you will get it for $1 for the first month. After that, it'll automatically kick into $49 a month if you stick with it. But as you can see here, I want you to be aware you can cancel this at any time. You can stay for 1 month, you can stay for 6 months, whatever you find beneficial to you and your trading. But I want to at least give you the opportunity to see real trading in real time and how it's done. So again, as always, thank you for your support, and I hope to see you soon.